Okay, I think we're going to get started for this morning. Good morning, afternoon, evening to everyone, and welcome. Thank you for joining us early in the morning for some of us on this post-Thanksgiving Monday. I hope that those who celebrate Thanksgiving had an opportunity to pass that time with friends and family, at least on Zoom. So we're delighted to have today a distinguished panel of leaders from the microfinance space. CGAP has organized many webinars since the COVID-19 crisis began, and in microfinance, we've often focused on the risk to institutions arising from the COVID-19 crisis. Today, what we want to do is shift our focus to the customers those institutions serve and what impact this crisis is having on them. We also want to hear from our panel on how they're helping their customers to get through the crisis. Before we get stuck in, I'd like to just note that this is a special webinar that we're holding as part of the World Bank's Community Connections campaign. For those of you who don't know the World Bank, each year in November and December, the bank runs a campaign with the aim of supporting a wide range of charitable causes that staff can donate to. And the microfinance institutions represented here are all participants in the Community Connections campaign. So without further ado, I'm joined today by a distinguished panel that represents literally decades of history and experience in building the microfinance sector and serving poor customers with financial and other services aimed at improving their lives. We have with us today Shameran Abed, who's the Senior Director for Microfinance and Ultra Poor Graduation at BRAC, Steve Hollingworth, the President and CEO of Romaine Foundation. I need to advance these slides, which are no longer advancing. Here we go. Okay, we've got Steve Hollingworth, who is the President and CEO of Romaine Foundation, Michael Schlein, who is the President and CEO of Action, Andre Simon, who's the President and CEO of Finca Impact Finance, and Momina Ejazudin, who's the Global Head of Microfinance for the International Finance Corporation. I have many things to advance here. Okay, I'm having some slide difficulties. So before we get started, I wanted to make a few logistical points. Firstly, all participants will be muted during the presentation. Please do use the chat box to enter questions and comments. We'll be taking questions from the audience after an initial round of discussion. You can find the chat box in the lower right-hand corner of your screen. Let's see if I can advance my slides again. There we go. We are recording this webinar, and it will be posted on cgap.org with a link emailed to you afterwards. And finally, for World Bank staff, please do consider donating to these organizations as part of the Community Connections campaign. This year, your contributions will be matched 2 to 1 by the World Bank. There is literally no better way for you to make your dollars go further in making a difference in the world, which is so important in this uniquely challenging year. So we're going to start with a brief statement from each of our panelists, walking you through what they're seeing on the ground and how they're helping their clients to get through the crisis. We'll then do a couple of rounds of questions, and then finally, we'll open the floor up to some questions from the audience. So please do send them through in the chat. So good morning to all my panelists, and thank you for joining us. And I will start with Shameran. Shameran, over to you for 4 minutes.
Thanks very much, Greta. I hope you can hear me okay. So first of all, thank you very much for having me on this panel. I think it's really, really important that we're doing this and focusing on our clients, which I think is very important because we talked enough about our institution. Let me just start by saying that obviously BRAC works in about 10 or 11 countries in Asia and Africa primarily, and we work across multiple sectors. So if there's interest in what BRAC's been doing in response to this pandemic broadly in health and other sectors, there's a lot of information on our websites and through our social media channels. I'm going to really focus on the microfinance part of BRAC and what we are seeing with regards to our clients and what we're trying to do in response to that. And again, I would say that even though we work in many countries, that I hope to be able to reflect a lot of that. A lot of my understanding of this is largely shaped by what I'm seeing in Bangladesh, particularly because that's where I'm based, and that's where I get a chance to visit with clients and see what's going on firsthand. First thing I would say is, we've faced, obviously all of us in the microfinance sector, we've faced many crises before, natural and not. And what we've learned coming from a country like Bangladesh, where natural disasters are fairly common, we face them a lot, and in some of the other markets where we've worked, especially, post-Ebola in West Africa and other markets, we strongly believe that, at a time like this, that the most important, the most effective, and the most powerful way you can support your clients is by pumping more cash into the system, giving more cash to your clients, or keeping cash among your clients rather than trying to soak it up. So even through this whole crisis, our main primary focus has been on making sure that we are supporting our clients through this by ensuring that they have money to get through this. So in the early days, when almost all of our countries went into lockdowns, when in certain markets our operations were entirely suspended, the credit operations. What we were trying to do is keep in contact with our clients, understand what's going on, but mainly wherever we are deposit taking, make access to deposits and savings as easy and convenient as possible. So in Bangladesh, for example, we said to our clients, if you've got bKash accounts, tell us, and if you need savings, we'll just send it to your bKash accounts. In other countries like Uganda, where we're a regulated tier 2 bank, we said all of our bank branches open for smart. They can come and collect your savings. You can come and take as much of that as you need. So that was the early days of lockdowns. But of course, the lockdowns lasted mostly through April and May, and from June, most of the countries started to go into post-lockdown. Some countries kept it for slightly longer, some countries ended earlier. And since then, what we've been trying to do is understand where our clients are. So if I can, but our clients are heterogeneous. So, there's a lot of, not everybody's been impacted in the same way. But if I can just say broadly, we see one group of clients who have not been heavily or badly impacted by COVID. Now, that's not the bigger, that's a smaller percentage. I would say in most markets, that's about maybe 20-25% of clients. They are in different trades. A lot of them are in agriculture, for example. With them, our focus has just been on continuing to serve as usual without obviously there's been some disruption due to lockdowns and shutdowns, but since then, we've just said, it's back to business as usual. Come and borrow from us and transact with us. The biggest chunk are clients who were affected quite badly during the period of lockdown, but the impact has been more temporary than permanent. So they've, ever since lockdowns have been lifted, they have gone into a recovery mode, and the speeds are different, but as economic activities picked up, their incomes have started to pick up, and they are recovering from the lockdown, from the impacts of the lockdown. And with them, we've really been focused on trying to refinance loans if needed, making sure they have access to more money if they need, because all the loans have been automatically rescheduled because of lockdown. So we said, your next loan might not be due for a long time now, but if you need money now, we are willing to pump money in and refinance you. And we've been doing a lot of refinancing in all of our markets, and that's something we've been pushing very hard. There is another group, and again, this is a smaller group, thankfully, who are impacted in more long term. Like, they are not on the road to recovery yet. Lots of businesses have not reopened. Lots of businesses, even if they're reopened, are seeing their sort of incomes at a fraction of where they were pre-COVID. And with them, we've again said, you might not be ready for a refinancing because your business is not picking up, but we will restructure your loans. We will give you a longer runway to pay back and make sure that you can keep as much of the money that you have with you, instead of trying to soak up money from those businesses or from those households right now. So across all our portfolios, whether it's the group portfolio, whether it's the sort of more small enterprise or micro enterprise portfolio, we've really been focused on making sure we have enough liquidity to keep money in the hands of our clients. So I'll stop here for now and say more when we have more time.
Thank you so much, Shameran. Okay, so next we'll move on to Steve Hollingworth from Romaine Foundation. Steve? Steve, are you there?
now, I think.
Yeah.
Thank you. Thanks, Greta, and happy holidays to everybody. We're very proud to carry on the legacy of Professor Muhammad Yunus. Over the last 10 years or so, our efforts really have all been focused on how the mobile money channel and customer relations management platforms can integrate very poor women into financial services. And this really relies on data push and pull that helps to inform clients, inform field workers, and also gather data about clients and field workers. We have a number of platforms: TarWorks, GLeap, FarmGrow, MOTS, Motec, which all allow us to connect field workers and clients to what's all happening in the digital economy. On the first slide here, we're very proud of the fact that over the last 8 years or so, we've supported and created over 380,000 community agents. These are women, by and large, in communities providing financial services, providing access to agricultural services and health services through digital enablement. And this has really been a huge force multiplier for us in our work. Let's go to the next slide if we can. This really relies on, putting women within an ecosystem of data and an ecosystem of financial services, and the community agent essentially linking other community members to all that's happening in the mobile money and in the mobile data universe. And as I mentioned, the community agent really is essentially a vital link between the digital economy and what's happening in a community. We'll go to the next slide. This really relies on the agent being part of an ecosystem. And the ecosystem relies on some old tools, some things that we've always done, and it relies on some new tools that all of the microfinance world is incorporating. It really continues to incorporate the need for peer support for women and farmers working together in groups. It continues to include some of the soft skills area about promoting gender equality and understanding the constraints that women face in assuming new roles in their households and in their communities and in accessing new economic opportunities. And it requires access to information, access to formal products and services that we can deliver in the digital economy. So those things really provide us with old and new tools for continuing to empower rural women. We'll go to the final slide. Just a simple example is we have a major program in India which really does rely on the Grameen community agents. In India, they're called mitras, which means a friend, so literally a village friend. And this is really the base of what's happening in India with the digital economy, with the JAM or with the India stack, depending on how you know it. She is able to undertake biometric identification of clients and pay directly into remote clients any government entitlement programs. In a number of our countries, of course, the early transactions are government entitlement programs, and many of them they're mobile money transactions. And then what we do is we help the Grameen community agents diversify their financial products and their information flow depending on the type of demand that she sees in her community. In India, she's been instrumental. The mitras have been instrumental in sharing information about preventative behavior around the COVID emergency, and this is something that we've been able to integrate across our program. In India, the mitras have been declared essential workers, and that's meant that they've been able to work throughout the pandemic, and they've seen an excess of a 200% increase in their transactions, reflecting the huge demand and the huge shift that's happening to the digital economy. Also, as part of our emergency response in a number of countries, we've done direct cash transfers through our community agents using both in-person as well as virtual verification of need. We've also done a huge support to SMEs with the transfer of vouchers using cryptocurrencies. And, we've also expanded our work in health and health education via the community agents and the mobile technology. So thank you very much.
Right, Steve. Thank you so much for that. So we'll move on to Andre Simon from FinCA. Oops, no, I got that wrong. Axion is next. So Michael Schlein from Axion.
Happy to join you. It's great to be with you all. So as many of you know, Axion is a global nonprofit dedicated to building a financially inclusive world. Over our history, we've helped to build, which is now nearly 60 years, we've helped to build 160 financial service providers in 55 countries that today are serving millions of clients. The first slide is some photos from some clients. So Chandra has a small store in Raipur, India, where she sells bracelets and small household items. And it's extremely remote, no bank branches nearby, and the only way she could grow her business was to borrow from friends or family or money lenders. Our partner in India, Subk, has changed that. Subk has built an extensive rural-focused agent network that brings basic financial services to that very, very last mile. With technology, they transform small mom-and-pop stores into bank branches, and with that, Chandra could get a loan and grow her business. Carolina is in La Paz, Bolivia, and she was making small school uniforms, but the school shut down during the pandemic. With a loan from Banco Sol, Carolina pivoted her business to start making personal protective equipment for first responders and is now thriving and really on the front line of helping with the pandemic. And Karen runs a small store in rural Colombia, and she was selling sweets and pastries, but she really couldn't, her business shut down virtually because no one could visit in person because of the pandemic. We have an EdTech platform called Ovante, and she gained the digital skills that she needs, and she's now selling products online, and that has really been a lifesaver. Just let me take a step back and give you a broad sense of our work. On the next slide, you'll see we invest in and advise established banks and microfinance institutions all around the world, and all of these are committed to digital transformation. And many of them shut down with moratoria, but now I think almost all of them are back on track, restructuring loans and helping their clients get back on track. The next slide is Global Advisory Solutions. We have a team of over 50 experts who basically specialize in the digital transformation of existing institutions all around the world. We get to see what works and what's not working and bring that to our clients. The next slide is Venture Lab, and these are all seed innovative companies at the early stage level who are all finding we're living in this spectacular technology revolution, and these companies especially are using new technologies to reach people who have never reached before, all with the thesis of fintech for inclusion. And the next slide is with our partner Kona. It's the same thesis. These are all fintech early stage companies where Venture Lab is at the seed level. This is at the early and growth level. And two more slides, and then I'll switch back. Is our Center for Financial Inclusion, where we a year ago recruited Mayada El-Zagbi from CGAP. Thank you, Greta. And it's our independent think tank that's housed at Axion, where we're now focused on climate change, women's financial inclusion, data, and consumer protection. And the last slide, just so you have the full sense of our work, is in the United States, the Axion Opportunity Fund is the leading nonprofit, on the next slide, the leading nonprofit small business lender in the United States. In over 25 years, 90% of our loans have gone to businesses that are run by entrepreneurs who are Black, Latinx, women, and immigrants. So I'll stop right there. Thank you.
Thanks. So now over to you, Andre. Thanks very much.
I get ready to take a sip of coffee. So first of all, thanks to CGAP, and thanks to all my colleagues on the phone and to all my colleagues across the network. It's just been amazing to me, the level of dialogue that we've been able to have to really shine a spotlight on the challenges that our clients are facing, and the collaboration has been so gratefully received. So I'm going to move through some data relatively quickly. I think, like everyone, the first thing that we did was turn to our clients and ask them what they were experiencing from COVID. And some of you may have seen this data, but we started this almost immediately after the crisis began, collecting information to look at what the pain points for our clients were and how they were trending. And, you know, obviously we were concerned about food security issues. We were concerned about, you know, the overall obstacles that people were facing to their business, but then we also really wanted to understand, you know, what impact was it actually having, and what was people's sense of their own ability to repay and their own economic security. And you can see that, you know, the biggest worry, which is still increasing, is that overall economic situation. Even though the lockdowns have been lifted, as Shameran and others have said, some of the clients have not been able to pivot their businesses and have been permanently affected by this. So if you go to the next page, just to talk about our response, and I'll focus on customer engagement that we've been focused on. You know, we did limit our lending and really tried to not over-index people for crisis and put them in a position of, you know, taking on funding that they could not repay. And we focused on the segments that were the most flexible throughout the crises, particularly in the lockdowns. And we've continued to communicate with our clients around the kinds of businesses that are the most agile that they can invest in. We talked a lot with our customers very early about the basic health issues associated with COVID, to try and make sure that there was as much information out there as possible. While we also the longer term impact is, clearly that's going to be the main pain point, I think, for institutions like us and for the clients, is we don't yet know exactly, given the volume of restructuring that's been put in place. And so it remains to be seen some trends in some countries. It remains to be seen what their real capacity to repay will be once they have returned to normal. I think the most interesting, though, in terms of looking at our clients, if you just go to the next page, you know, we've obviously been focused on digitizing and moving as much of our business as we can to non-branch channels for the sake of flexibility for our clients to keep their businesses running during the crisis. You know, obviously that speaks directly to, you know, social distancing and health factors. And that has been enormously helpful, as have the call centers that we have stood up in all of our subsidiaries to maintain that dialogue with the clients. But we, in addition to a lot of the SPTF participants, also went out and surveyed, you know, what could we do more for clients? And I think there are a couple of things that come out of this that are actually really interesting. And a little bit different from what we've heard in the past. So clearly, the flexibility on restructuring, you know, the relief that clients are looking for on the credit side, that's something that we all are familiar with and we understand. And as Shameran mentioned, there's a delicate balance that institutions are trying to strike in terms of maintaining their own ability to serve over the longer term and to provide that relief and that flexibility to clients. And that's probably the biggest challenge that we face, I think, as an industry. But what I found super interesting was this request that we're getting from our clients to provide them with more educational support and more information. That is actually different from what we've heard in the past, where I think there's been a lot of focus on the transactional side and a little bit less focus on that community side that Steve was talking about. This is kind of the critical place where we're going to see how digital is defined into the future. How do you maintain that flow of information to clients, provide them with the tools and access that they need while still leveraging all of the technology that's out there. And honestly, we don't have a perfect answer to that question yet. We're working actually in partnership with Axion on some financial health initiatives to try and see what we can digitize. But I think that is probably the place where there's the biggest opportunity for us to really connect with our clients as we move forward and have the biggest impact once we have gotten through that immediate crisis.
Great. Thank you so much, Andre. And please do keep questions coming through on the chat. We're keeping track of the ones that are here already, and we'll have a chance to address those a little bit later. But Momina, over to you.
And my computer just froze, so I'll be speaking quite stream of consciousness, so please excuse me for that. Thank you so much for inviting me as part of this panel. I think hearing from, Romaine, BRAC, Axion, Finca, a lot of what we're seeing at the IFC is very similar. I think globally, when you look at the data that the World Bank has recently released, there are about 100 to 150 million people who will go into poverty as a result of COVID. And that number is quite staggering when you realize the context that 1.7 billion people actually had access to finance over the last decade. So a lot of the preoccupation for us at IFC as well as the World Bank Group has been, how do you support the microfinance sector and avoid the reversal of the gains that we've had over the last decade? I think a couple of key differences between the last crisis and this one, that this crisis has been literally everywhere. It's affected MSMEs everywhere. 81% of the MSMEs which is about 2.7 billion, are in lockdown. And then when you realize that effect is literally catching on in different markets, then there is a huge difference in terms of liquidity and solvency needs. So at IFC, we work with about 900 financial institutions, 300 of which are MFIs, and we've been very proud of the work that we have done, reaching 58 million MSMEs in that space. So most of our work, and including with the partners on this virtual roundtable, has been to see what is, providing preemptive liquidity and financing to the sector. We've already done a $2 billion emergency liquidity response to the sector, and we're following that up, hopefully in the new year, with a more targeted response of about 400 million for MFIs or base of the pyramid players who are working particularly in the IDA and fragile and conflict affected markets. Some of our work has also been on the policy guidance side and really engaging with regulators to see what is best practice. Early on in the crisis, there were many knee-jerk reactions to providing liquidity to the microfinance sector, but in Pakistan, for instance, to banks, the microfinance regulated banks, as opposed to the NBFIs. In Kazakhstan, overnight policy recommendations, which meant that MFIs had to restructure 40% of their portfolio. So by constantly dialoguing with some of these regulators, including with the World Bank and CGAP, the idea is to really see what is best practice and not. We're also trying to align with other investors in this space. We have huge presence in the microfinance investment vehicle space with funds like MEF, which was designed as a crisis response fund, to see whether one can provide longer term, at least short term liquidity preemptive. I think the difference between the last crisis and this one has really been that the liquidity needs are not as strong. There has been a depressed demand in the sector for liquidity. Institutions almost, have moved from business continuity to maintaining operations. We're not yet in the stage of resuming growth. And it's difficult to quantify at the moment in terms of solvency mechanisms or requirements. But we stand ready, to engage with players. I think the second aspect has really been the move to digitalization. I think the microfinance community was really toying with that, whether the need to digitize or not. I think this crisis has clearly shown that digitizing some aspects of operations, whether it's on the credit or the deposit side, is really critical. And I think in terms of recovery, we're still monitoring the markets really closely, but it really varies. So just as an example, in Cambodia, which is one of the more mature microfinance markets, if you have the tourism sector, the garment sector, construction being overall affected, and like 400,000 workers being laid off in the government space, that clearly is going to have an impact on not only the MSMEs which are in that space, but as well as the MFIs or the FIs that are serving them. So part of it is really trying to disaggregate what the effects are of COVID, and then being able to provide, as the others have said in this call, particular financing or non-financial services to those affected clients. I think my concern and our concern actually is that there will be a lot of countries which may not have the capacity or the government policies to really rescue some of the smaller players, and particularly in terms of the clients, that women, the poor, the vulnerable, particularly in fragile and conflict-affected markets, may be disproportionately affected. So those are some of the things that we've been thinking about.
Great. Thank you, Romaine, and thanks to all of my panelists for keeping their initial interventions short. So what I'd like to do is turn to the future. I think one of the things that's a distinguishing characteristic of this crisis is that there's so much uncertainty around it. We're experiencing a massive second wave here in the U.S. A number of other countries are also experiencing the same, and nobody really knows how this crisis will play out. So I'd like to hear from all the panelists about what you think going forward the biggest risks to your clients are likely to be as we move through the subsequent waves of this crisis, and how are you continuing to anticipate and help your clients to manage the risks? We've heard from you about what you've done so far, but what is the plan going forward to manage some of those risks? And if I can just go through the same round again, maybe starting with Shameran.
That's obviously a harder question, Greta, because it's uncertain. We don't know what's going to happen. But obviously, we are seeing numbers go up everywhere. The second wave is well and truly upon us, almost in every market. And we might go back into lockdowns or more targeted lockdowns in certain markets, and we might not. Most of the countries where we are present, at this point, even though the health situation is getting worse, but economically, countries are staying open. And I think the thinking now is that, countries probably won't go into sort of nationwide lockdowns for long periods of time. And I hope we can avoid that. My general fear is that there will be a contraction of money. People will get, people will think there's risk, and we need to look at this carefully, and that we won't be able to go out and do more of what we need to do, which is do more microfinance, provide more savings and savings and credit services to our clients. I fully agree with Andre that there is a certain group of clients where we have to make sure we don't make them over indebted, and we've got to be very clear and deliberate about that. But having said that, I think this is not the time for austerity, and that is my biggest fear. Is this is the time where you have to go out with more public spending, put more money into the hands of the poor. This is what Abed Banerjee has been going on about for the last few months, and saying we're going to fail the poor if we think that this is the time for austerity and we don't pump enough money. If you look at government sort of programs, in most of the countries where we operate, governments have taken up large stimulus packages, pumping money, trying to pump money into SMEs, trying to pump money into, local clients. But again, we find that a lot of that is not reaching where it needs to, because again, most governments are trying to do it through the banking sector. Most governments are trying to do it in a way that it's not viable to do. And so again, I think, we've got to really get money into the hands of people. We need to figure out ways to do it that is easy, convenient. Do it through MFIs if you can. Do it through mobile money players if they're the most convenient way to get through and the cheapest way to get through. But that to me is the most important. And even through a second wave, or even through the uncertainty of the next few months till we get to the point where we have, the vaccines and we get vaccinated, I'd just say we just need to stay in business and continue to do more of what we're doing.
Great. Thanks so much, Shameran. Steve, how is Romaine Foundation thinking about, sort of the forward-looking aspects of this?
Sure. Currently, of course, the focus largely is on emergency relief, where we can through our agents. It's on, promoting healthy behaviors in the COVID. But, we're actually seeing a much greater growth in interest and demand for what we do in agriculture. And I think it's linked to the, of course, the economics and the health are all very linked to food insecurity, as we're seeing in the U.S. And I think that's the emerging problem when you look at the numbers of chronic poor globally. It's going to really be seen through growing food insecurity. And this is it's partly effective demand declining, people not being able to afford to buy food. It's partly value chains breaking down. It's partly, importation, export, being stressed. So that's our concern. And, there are solutions within, the digital economy, within, ag tech that help to address some of these things. But, as a sector, we've got a long way to go to really figure it out.
Yeah, thanks, Steve. Michael, how about the Axion family?
So, picking up on what Shameran said, I do think in crisis, governments are quick to turn to banks, and I do think banks have never served the poor well. That's why this whole industry of financial inclusion exists. And so I do think the first reaction of trying to work through the banks to reach the 3 billion people at the base of the pyramid was not the best. I think we need to get regulators to understand that they need to work beyond the banks through the non-banking, the NBFCs, or in the United States, the community development institutions, work with the institutions that really are focused on the most vulnerable people. I do think big picture, this group in particular, over our lives, we have seen the greatest reduction in poverty ever in human history. And for the first time in our lives, we're seeing those trends reversed. And Mamana mentioned 150 million people falling back into poverty. So I think the urgent goal right now is to minimize that damage. And of course, that is restructuring and liquidity. But longer term, I do think, and I hate to say silver lining because there's nothing good about this, but I do think the pandemic is accelerating the digital transformation. It used to be culturally, there were many people who just preferred cash. And now if you have the option to transact digitally, you're going to take it because cash is dangerous today. Face-to-face transactions are dangerous. So I do think we can do a lot to accelerate digital transformation at the individual client level, at the small business level, at the financial institution level, and of course supporting broader fintech innovation generally so that we can come out of this stronger and reaching populations that, again, have been left out for too long.
Great. Thank you, Michael. Andre, how are the FINCA affiliates thinking about the forward stretch?
And so, Steve already talked about there's just a need for relief across, the poorest of the clients, and that's a reality. But I think, they're really looking to us and they need flexibility. And so, we are trying to be as flexible with our clients as we possibly can, recognizing that has limitations also in terms of our ability. And I think, everyone before me already mentioned it, but, having that liquidity flowing through the system is really going to be essential in order to make sure that flexibility can be there. And then I think there's a group of clients, as we've also mentioned, that their businesses have been wiped out and they will need to be recapitalized. Clearly, and somebody I think wrote this in the chat, most microfinance clients are not dependent on a single business. They have multiple income flows. And a lot of clients have been able to, even with the reduced income from one of their businesses, pivot to operating new or potentially different businesses. But those businesses were, in fact, wiped out, and they have lost whatever they might have had that was invested there. And so, there's not just a need for continuing to keep the flow of liquidity, but there's also really a strong need for
Andre, we've lost you. There's a strong need for what?
additional injection of capital into the system in order to restart those businesses.
Okay.
And I'll stop there.
Thank you. So, Momina, the IFC is in a little bit of a different position, but you're sort of backstopping many of the organizations that are working in the field. So how's the IFC thinking about the months ahead?
And with every crisis, obviously, comes opportunity, right? And at the at the client level, when you think about MSMEs, I think what we've seen in previous crises has been that they have been resilient. I mean, they have no other option. So even when I'm thinking of like small women-led organizations which were making clothes, and now they've switched to making masks, right? Like they're able to pivot in that way. And I think it's been a mixed bag for us in terms of like the deposit-taking entities versus the non-deposit-taking ones. You know, the deposit-taking entities have tended to do better. The ones that are serving more MSMEs, so the ones which are like, you know, more broadly based or more may have diversification. I think we're pretty optimistic given what's happened in the past in terms of MSME resilience. I think it'll be really important, as Andre mentioned, like to keep that liquidity flowing in the system. Obviously, I think from a commercial investor mindset, I think that, you know, it's still very early days because the kind of capital that may be required is will need to be patient and long term, right? Like there may not be remunerations in the past, and that you see across the financial sector. But I do think that there are, when you look at the East Asia experience, and they're probably further along in COVID than many of the other regions of the world, you are seeing a resumption of growth. You're seeing like some of these tech platforms and, you know, MSME platforms really like being able to play a critical role. And you're seeing consolidation within the sector, which probably is not a bad thing. So I'm fairly optimistic about, obviously there will be changes within the sector, but overall it's there hasn't been, I think there's a pause at the moment, and we're still waiting for like resumption of growth. But I think each of us have our role to play to make sure that, you know, the end clients are being served effectively and cheaply and, you know, with the best kind of, you know, tech-enabled product.
Yeah, I think we're all sort of holding our breath to see how this plays out. Shameran, you wanted to come back in?
One additional point kind of quickly. You know what Momina said in her earlier remarks about the numbers of people who are going to fall into poverty because of this. I mean, we're already seeing that, right? So, you know, we've been calling this particular group the new poor, right? People who were not poor pre-COVID but are now poor, fallen into poverty. And there are some very interesting dynamics that are going on that we need to understand better and respond to. So, for example, if I can mention two, there are a lot of people who are based in urban areas and their incomes were in urban areas who've moved back to rural areas, right? There are a lot of people who are overseas migrant workers who have come back because they've lost their jobs, right? Now, these are people who are not sure whether they're going to move back to urban areas, whether those income sources or streams will come back, or whether they'll go back get back to the Middle East or where they came back from. Now they're in a rural area, they're back in their villages, but they haven't been in their villages for many years, so they've lost a lot of those social connections and a lot of that social capital. So from a microfinance institution point of view, like when you're doing group methodology, like, you know, the group members don't know these people. I mean, they were here like 20 years ago and now they're back, or 10 years ago, but we don't really know them anymore. So unless we very deliberately go and reach out to these people and try to include them, there's a big risk that they will get left out. They don't have the capital, the social capital, the track record with the MFIs where they are now. They might have added in urban areas, but they're defaulters there, and there are potentially new clients where they are now. So we've got to really think about this new poor group that's going to be there in all the markets where we operate, and just focus and think about what we can do. And maybe we need to combine a bit of microfinance with some of our learning from livelihoods work, graduation work, and try to combine some of that.
Yeah, we're hearing some comments come through on the chat on that too. Thanks, Shameran. So I want to turn to a couple of questions from the chat and just sort of throw it out to the group. And there are a couple of different directions we could take on this, but let's start with the non-performing loans problem. You know, many of you are working in markets where governments announce moratoria. Those grace periods sort of extend over certain amounts of time, and then we start finding out what all the problems are on collections and on restructuring. So we've had a couple of questions in about what you expect in terms of impact on your portfolios when those grace periods are lifted. And also there was a question to you, Shameran, in terms of, when you are restructuring loans, does it come with additional cost to customers in terms of the rate? And how does the customer perceive this additional cost, if there is any? So if each of you could speak just briefly about what you're seeing in terms of your restructured portfolios and what you expect to happen over the next 6 months as those moratoria are lifted. Shameran, maybe starting with you.
Yeah, so when during the lockdown, when our operations were suspended, we suspended accruing interest. So for however long in whichever market, we couldn't go out and collect, and borrowers were forced to hold that money. Even if they wanted to pay back, they couldn't because our branches weren't operating. We suspended interest. After that, obviously, when we started accruing interest again. When we're restructuring loans, they're restructured at the same interest rate as a normal loan. So there is no additional interest, but of course they are priced at whatever the normal rate of interest are for those products. In terms of delinquency and moratoriums, obviously as a result of COVID, we will see NPLs go up. My sense is they'll be maybe around double of where they are normally. Hopefully we keep it. I mean, normally, in our microfinance entities, we tend to set up about 1 to 1.5% of our loans in any given year, right? Normally 1%, but if it's a bad year, goes up. This year, I think it'll be between 2.5% for this year going forward. I'm hoping we can contain it there. So we've increased provisioning and we're trying to hold it there. Now the moratorium, the problem that's created, it is really hard to understand where we are exactly. And we won't get a good sense of that till the moratoriums end, or we can go back to classified loans and seeing what the hit is. But I think that it's going to look much worse at the beginning when the moratorium ends and all of a sudden you're reclassifying a lot of loans and all of a sudden your NPLs are just going to shoot up. I would just say to everybody, calm down. I don't think they're going to remain very bad for very long. People are getting back into economic activity. Hopefully, if there aren't other lockdowns, NPL numbers will go down over time, and I think they'll stabilize next year. I think we will see strong recovery.
Oh, okay, thanks, Shameran. Michael, did you want to come in?
Maybe I'll just pick up on that. I do think that we're sort of in the fog in terms of how these institutions are. I do think compared to where we started, I actually think that the impact has been less than I worried about, but now I think it's going to be longer than I initially thought. So I think there's an extended period, and Shameran makes a very important point. Again, the regulators were good and smart about how the institutions can recognize these losses, but that actually creates sort of fog. It's hard to really value these institutions. I think that's going to take a long time, or months, several months to really work through. So I think it's just a little confusing. Going back to your broader question, I do think we will see the industry consolidate, but even there, you can't really consolidate an industry till you can value an industry. So.
Yeah, lots of fog, definitely. Andre, any thoughts from you on the NPLs question and portfolio quality?
So we definitely have seen a leveling off, and so I think kind of to Michael's point, like it's not as bad as we had feared. But, that almost 50% of the loan portfolio that's been restructured, we are starting to see signs of weakness in specific countries. And, let's not forget that we've had hurricanes and crop disasters and instability on top of everything else that we normally see. And so that is also having an effect, I think, in some very specific places, like in Pakistan, for example. So, that to me is still an unknown, as everyone said, but clearly there's more pain that's buried in the restructured portfolio. And then you have the accounting side of it on top of it. And I know this is a little bit maybe too inside baseball, but, the fact that nobody knew what the right duration was for restructuring is also having an effect. Because in some cases, institutions are now having to do a second wave of restructurings that comes along with additional costs. And so that further muddies the water.
Right. Steve, any thoughts from you on the moratoria?
Just that, with smaller MFIs or financial service providers, the only thing I'd add is, a lot of concern by lenders. If you're fortunate enough to have a deep capital base, you're moving forward pretty well. And probably most of the folks, in this conversation have that. But we do have some participation in smaller, more fledgling groups, and it's a struggle to keep the lenders on side.
Speaking of lenders, Momina, how is the IFC thinking about this?
So I think compared to previous crises, the microfinance industry has matured, right? So that you do have a number of larger players who have deep pockets, but as well as have built up the capital base over years. I think on the moratorium side is where we frankly see much more muddy waters, as Michael and Andre were saying. I was looking at an MFI in Egypt this morning where, the moratorium keeps getting extended, so they have to keep rescheduling. Then the government was sending policies, changing policies that clients don't necessarily need to repay. And, this really creates a level of uncertainty for not only the microfinance institution, right, being able to project its own cash flow and liquidity over the next year, but also in terms of lenders being jittery in markets like that, being able to sustain because they can't see it. And, we had a very robust discussion on our credit committee on something in Myanmar last week where there have been regulations which are changing overnight, and there's a lack of certainty. So clearly there's a need there is a need, and we see that very clearly ourselves, to provide liquidity into the market. But with the bells and whistles that come with the anticipation of these regulatory changes, which may just change the fundamental dynamics of whether it actually makes sense to operate in that market. And that, I think, creates much more uncertainty and fogginess, and you don't necessarily know the length of it. So what we've seen in various cases, I think, especially in the Middle East and in Asia, where the moratoriums have extended for quite a while, and then they keep extending, and that is creating actually much more uncertainty for many of these MFIs.
Great. Okay. So we are running up against time, so I want to put one last question to my panelists and just have you give a quick sort of Twitter-like response. I think many have sort of acknowledged already in their opening comments that this crisis has sort of raised the curtain and made us see some things that I think the industry needs to grapple with. It's sort of forcing some change on the industry. As we think going forward and we think about sort of building back in a way that would make the industry stronger, what do you think needs to happen for microfinance to kind of come out of this crisis stronger than it came into it with? And what do we need to see change? If each of the panelists could just very quickly comment on that, then we can wrap up this discussion. So maybe let's go backwards, starting with Momina this time and working our way up to Shameran.
Okay, thank you. So very quickly, I think governance and risk management, digitization, which has to be embedded in the process, and move towards better governance and consolidation.
Very succinct. Thank you. Michael.
Wait, I thought Andre was next. Anyway, I think 20% of the microfinance institutions in the world have reached meaningful scale, and I do think those are the ones who can invest further in digital transformation. I think there are many, many institutions that are subscale and will not be able to digitally transform. I think we're going to see, again, once valuations become more clear, consolidation, and I think you're going to end up with a smaller but stronger industry that is capable of investing in new technologies and expanding the scale and scope of who we can reach.
Great. Thank you. Andre, how about you?
I will say operational efficiency has to be a huge push, and obviously linking that to digital outreach. And then I agree with Michael, consolidation for sure needs to take place. And I think that, we need to continue to press for local currency funding and deposits in particular to really try and create more resilience across the sector.
Great. Steve, how is Romaine thinking about the future?
Echoing what so many have said, I think digitization is going to offer a wider range of access to financial services and information. That's the direction that I think we're all promoting. I think the missing link that nobody has figured out yet is data privacy, data governance, data sovereignty, right? And, what paradigm are the developing world, regulators going to adopt around data?
Yeah, I think that's a big one too. Shameran, last word to you.
Data, but Steve kind of stole my thunder. Okay, digitization for sure. I think what I would say is, look, we've been saying for a number of years that digitization is the future, no doubt about it. But what this again proves to me, and I hope proves to my colleagues on this panel, is that we've got to, as microfinance institutions, we've got to lead this. One thing is, there's a lot of people out there who are saying microfinance has had its day, and we're going to have these fintechs come in and blow you out of the water and take over and lend to poor people in hard to reach areas. And we're not seeing that. But at the same time, I think if we don't change fast enough, we're missing a lot of opportunities. So we need to really get on that now. And I think this has proved that we can, and our borrowers are ready. So we've got to really push on that. And data, how we use our data is very, very important. We use our data in many ways through this crisis, even sharing it with the government in terms of how to target their stimulus. So there's a lot you can do with the tremendous amounts of data that MFIs have.
That is a perfect note to end on. So the crisis has given us both the incentive and the comfort with both digitizing as organizations, but also for your clients. They're understanding the benefits of a more digital relationship with their microlenders. So in closing, I'd just like to thank all of my panelists for joining us on this first day back after Thanksgiving. It's been really helpful to hear from you how you're working with your customers. And just to thank you to all the participants on this call, and a reminder, all of these organizations and the good work they do are supportable through the Community Connections campaign. So I hope all of you will take a look at them and consider donating through the World Bank's Community Connections campaign to these important organizations and supporting the work they're doing in country. Thank you again to everyone for joining us, and enjoy the rest of your week.
Thank you.
Bye.